A major part of this system is the ability to identify the trend. This video is about the short-term trend lines. The short-term trend lines are 7 lines in 3 groups. The trend trio, that's the yellow, pink, and blue lines in the trend chart. In the power chart you have the green and orange line, and in the swing chart you have the green and red lines. Those 7 lines are slow moving lines by design, and we make them wide lines on the chart. All of the names of the line colors are obviously locked, but line width is not locked. You can make that any size you choose. The trend, the master long-term trend, is a line that a lot of people talk about. When you have a chance to talk to a day trader about the long-term trend, the trend is your friend, right? But nobody knows what trend to follow. And this was a major problem back when I started creating this system for myself. We weren't even thinking about making this for others. We did not know what trend to follow. And we created a master long-term trend with some exponential aspects to it. And we also created short-term trend lines. And we wanted the ability, I think every day trader wants the ability, even swing traders want the ability to be able to identify pullbacks or see rallies and grab a hold of these opportunities. We zeroed in on 3 aspects of the short-term trend line that gave us significant amount of information, and we contemplated making the short-term trend line into one averaged line like the master long-term trend line, but we could see that just didn't make sense, and so we kept the 3 groups in the trend chart and the power chart and the swing chart. And these 3 groups, these 7 lines, give us information very significant to the trading activity associated with a particular stock. The trend trio, we call it, is a group of lines that is probably quicker than the other 2 groups. They move faster, they change directions quicker. Power green and orange are possibly more the slowest of the 3 groups. Swing red and green are also slow, and one can be going up a significant number of days and the other one can be staying down the same number of days. Swing red never crosses swing green. Attached to swing red and green is another trio. It's the swing blue line. And originally this swing chart started out being created with swing blue as a crossover indicator. In other words, when blue crossed over green, which is on the bottom, it started an uptrend. And when it crossed over red, it was a strong uptrend. Oftentimes when swing blue crosses over swing green, it's a weak start to an uptrend. Not always, but a lot of times. The swing yellow is a faster line, and if you're looking at the activity of trend change or cycle change direction, look at the swing yellow more than the swing blue. The swing, excuse me, the 7 short-term trend lines are sitting on three out of the 5 charts. Within the system, we have the candle chart and then the 5 indicator charts: price, trend, zip, power, and swing charts. 40 indicators are on all of these charts. The candle chart has 4 band charts: the yellow band, the pink band, the cyan band, and the gray band. They obviously have upper and lower bands. The yellow, pink, and cyan are a type of a Bollinger Band, and specifically for the way our indicators work. And the gray band is a type of a channel band, again built for our system. When we trade, we use the 20 moving average, which is the green, the 50 is a red, the long white dash line is a 100 moving average, and the tan line is the 200 moving average. When I personally trade, I always have those lines on the chart. So there's 9 indicators on the candle chart. 31 indicators are meshed, excuse me, meshed inside of the other 5 charts. There's 3 on the price chart, the red, green, and blue, and the 31 on those, the 31 remaining indicators on those 5 charts have the 7 short-term trend indicators inside of that 31. So that leaves us with 24. 2 lines, the swing gray and the swing blue, are a little bit slower moving lines. And that leaves us with 22 market force recognition lines. These are the key lines that we deal with in the system. The sensitive indicators are an unbelievable part of this system. Without the sensitive indicators, we'd have nothing. I'm going to switch over to a chart here. The sensitive indicators are the heart of the system. There's a lot of other benefits to the system, including the powers that are within the system, the 3-step formula that's inside. But I want to, in this chart, I have the trend, the power, and the swing. The trend is on top, trend chart, and it's real obvious to see the blue, pink, and yellow lines cycling lower and higher as a stock moves up and down. Along with that, you can see the green and orange as they cycle through a cycle turn, I should say. And then same is true with your price red, your swing red and green. Now, as long as I'm on the swing chart, I want to, this chart here, all of these charts are set up on the same symbol. I'm using ALXN, and it's the summer of 2016. And I bring up this chart just to show you about the swing gray, because the swing gray is a deep cycle indicator, and the power pink is also a deep cycle indicator, but the pink and the blue, power pink and blue, and the swing gray are your three deep cycle indicators. But the power deep cycle indicators track the cycle a little bit in a little bit different way. They typically, you won't see them go as deep as the swing gray deep cycle indicator does. Right down in here where you see swing gray drop really low, that's what we refer to as a deep low cycle. And when it's above zero, it's a deep high cycle. And while I'm on here, I want to make you aware of a couple of key things. I'm going to expand this just a little. When you think of divergence, and the swing gray is an excellent indicator for this, and it has to do with a TOC and a BOC. BOC is a bottom of a cycle, and you've undoubtedly heard me talk about low angles up and low angles down, and bottoms of cycles and tops of cycles. But a top of cycle normally occurs above zero, and a bottom of a cycle normally occurs under zero. In this case right here, I'm going to put a vertical red line here so we see what we have. In this case right here, we have a bottom of cycle under zero in a low, deep low cycle indicator, the swing gray. Now this is not unusual, because obviously when the deep cycle turns and goes back up, we would see a bottom of a cycle. But I want to move this over one line, because this is the line that I'm referencing, or the idea that I'm referencing. Right here we have a top of cycle lower, and what that means is that the right leg is lower than the left leg. And in this case here, it's about probably 4 times lower, maybe 5 times lower than the left leg. When that happens, that's a key indication to a sharp movement. Now, I'm not going to get into gaps right now, but when we identified with this BOC, or this low angle up, because it is a BOC lower, and when that happens, it means that it's starting up, but there's not really a lot of market pressure there. And I'll get into gaps in another video, but you can recognize this as a possible continuation of a downtrend, is what I'm trying to tell you. And when we look at, I moved this line back over to identify the TOC in a bottom of a low cycle position. And obviously when that happens, we had a gap. This thing here is has a value of it's a penny short of $113. It closed up on top earlier at $123.57, so it dropped down $13 at between the two closing points. I might add that this is the beginning when that cycle happens. When you have a top of cycle with a lower leg, or we just identify it as a TOC lower, at the bottom of indicator cycles, it typically goes up the next day. Earlier I said swing gray was a slower moving line, and that's exactly the case. It goes down for one more day, and the red vertical line is now on the bottom of the cycle, at least from a price perspective. Swing gray continues down one or two more days, just very lowly, or at a low angle. But I want to bring this line over here and compare a couple of things that you can see things more effectively, or the idea will come out more effectively. I move the line over one more notch because right here we have a TOC, and this is a TOC higher pattern, and it is under 0, meaning it's a low cycle. So this is a type of divergence, if I haven't mentioned that before, or you haven't seen me discuss that on previous videos. Because the TOC pattern is generally in a above 0 situation, and to find it in a below 0 situation, especially on a slow moving line like the swing gray, that's what kicks it in more so than other types of lines. When this happens, you can almost always count on the following day going up. We've got a TOC higher pattern, and it goes up the next day. And I might point out when I move the candle over there, the numbers indicate that we had a low of 124.20 and a high of 129.52. So it was up $5.30 from the low to the high. And I'll also point out that the low was 124.20 and the open was 124.20. So you got a flat bottom green candle. Everybody in the situation knew, except those of us that were trading, knew that the market forces were going to go up quickly. In one way I said that wrong, except those that are trading, that have the system that they can see this stuff happen. The indication that this swing gray line can give you information is just phenomenal. If I move it back over here, here is a TOC on the swing in a normal swing pattern, and look at the size of that candle. I mean, it's probably, looks like it's about $7 long. So, and usually also when you have a BOC above 0, so you've got a swing gray candle that goes up above 0, that typically will give you a high green candle on the day that it's going up. And it can usually as well continue, but you have to analyze what you have for the following day. The 100 moving average, as you can tell, is playing a factor inside of this resistance situation for us in this area, but it does make a difference. Now, I'm going to switch back over to the chart that shows us the 3 groups of wide indicator lines, and again comment a little bit about areas of how we can see things. Whenever you have, like here is trend blue, goes down on a hump and then goes down on another hump. Whenever we see a double hump, it's usually an indication for a stronger swing trade. In other words, many days will go up after a second hump. either on the top or the bottom typically. The trend gray, red, and green lines are your narrow lines. They're your fast lines. And those, when trend red starts up, that's the quickest way to see a cycle change or a trend direction change. It gives us great insight. Also, I'm going to comment on parallel lines right here, because when the red is going in an uptrend, it travels above the green line, as you can see, many days here before it crosses back down under, and then the price drops. And in this case here, we had 7 or 8 days of congestion, and so we anticipated it going down, but it did not go down, and that's easily visible in your trend yellow line. If you look at here, again, I'm going to draw a vertical line, but if you look at where the 3 lines cross over 0, you can see that that when the yellow line, got two lines here, I'll change this red one to green. When the green, at the green vertical line, the 3 trend lines, short-term trend lines, cross above 0. And they cross back down under 0 over at the red vertical line. But you can see that the trend yellow, which is closest to the 0 line, and that's the line that we typically talk about as trend yellow when we're talking about 0 or aspects associated with 0. When the trend yellow is traveling above 0, price tends to go up. And it's real easy to see that occur there, and obviously the reciprocal situation is true as well. If I take and put in another red line, this is the day that this left vertical red line is the day that the 3 trend trio lines dropped below 0. And so you can see this area in here is in a downtrend. And what marks the uptrend? Well, that's real easy to see, and that is the trend red. And excuse me, I said that wrong. I'm sorry. It is the trend red. I was going to color that line yellow, and in fact, sometimes it's a little more clear in a blue. But the blue line points to our low point in the price cycle, and the trend starts going back up at this point. And there is a classic example. Trend red is in a low angle down, and you'll often see that happen. When trend red is in a low angle down, it marks the change of a cycle, and it's verified by numerous other indicators in the different charts. Now keep in mind, we only have three charts up here, not all 5, but your yellow is in a low angle up, power pink is in a low angle up, power blue is in a low angle up, power white is in a low angle down, and trend green is actually in a low angle down as well, but the angle is fairly hard to see. And then down on your swing chart, pink, Zion, yellow are all in low angles. So you've got quite a few low angles here that tell us that the change is going to take place and the uptrend is going to start. And so the trio, the short-term trend lines are very powerful information that as I said before, most people aren't even aware of how to use trends, and it's a sad commentary on how we interpret our need to understand what makes the market move. Because most people don't know which trend line to follow. So one other, I'll make a couple other comments on this. Here's a full chart with all 5 indicators, and this again is in the same area. We're in the summer of 2000. This over here is September of 2016, and over here is June of 2016 in ALXN symbol. And one other thing I'll point out here as well, in the price green or price chart, for example, when the value of the price starts going up, green and red separate themselves from blue significantly, and you can see that happening throughout the situation. So that'll tell you a lot when you're looking at patterns. Right here, I better so that we can, sometimes it's hard to see on the video unless I make a vertical line. This vertical line right here records a bottle nose in price red and green. It's also a bottle nose in blue. It's just that you have to expand the chart more so to see it as much in the price blue line. But it also happens in trend red and a few other lines that we have it's harder to see here. In our, for example, down here in the power chart, power yellow is in a, it's not a bottle nose. A bottle nose has 3 lines in the same direction. This is a notch down and then a notch up, and it is a bottom of cycle higher pattern. And again, that's a divergent situation because it's on a peak, not at the bottom like where you typically see a bottom of cycle movement. And so some of the indicators have a bottle nose with 3 lines going up, and some of the indicators have a bottom of cycle higher pattern on the peak. Both of those patterns are reversal patterns, next day down. And so I just point that out because I spotted it. I hope the explanation of how the swing, how the 7 short-term trend lines operate has been defined in your mind, because it really adds to the system. It really gives you a understanding of what the difference is between the master long trend line and the short-term trend. And as a day trader, even as a swing trader, we're more interested in the short-term trends than we are in the long-term trend. Even though we generally like to have them all going in the same direction. Because why? Because we're in and out of the market on the same day, or we're in and out of the market in 2 or 3 days. And the long-term trend is great and important, but not as important as the short-term trend lines. One other thing, when you have, sometime you'll find the trend trio starting to go up and the others are going down. And that's the start of an uptrend. In fact, the trend red has already started going up previously, because you need to use the trend red and green and gray as your, and they're the narrow lines, as your indicator lines that will identify the trend change. After red and green go up a little bit, 1, 2, a few days, sometimes they go at the same time as the trend trio, but not often. If they do, you're seeing a lot of power in the lines, in the marketplace, inside of that stock. And the other thing, line length, indicator line length is one way, a significant way for us to determine the market force and market pressure inside of a stock or inside of a movement. When you see zip red go from 3 to 97, I mean, it does that often. We've got a lot of DIFF, that's the difference analysis, and DIVG, the divergent analysis. We make comparisons in that area between the zip red moving 70 plus points and zip red moving 50 plus points, and then where it ends up. So there's some key things that happen in those diff analysis situations, and in fact that is when we were completing the system, one of the things that we really knew we did not have was the ability to analyze the strength of a market push or the pressure or force of the market in that stock. And when you if you getting ready to open up a position and you think it's going to go up, and all of a sudden the zip red line jumps 30, 50, 70 points, bam, get into it. It's going up. It's the line length of the sensitive indicators is the primary method that we have in sharing with you the strength of a market force or a market pressure within that stock. So I hope I've explained the majority of what the 7 short-term trend lines are. I do plan on making a few other smaller videos or shorter videos. This one I wanted to cover a lot of information in. So hope you enjoyed it. It's a fantastic system. I think if you've watched any number of videos, you have begun to see that and how effective it is. So whatever you do, have fun trading.